Hello, and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back to deliver your monthly news for South King County real estate. I'll go ahead and jump right on into these slides. So it is May 2024, and here's your South King County real estate update. So first off, I do have a new class coming at the end of the month. It's the pre-home buying workshop. So just 1 hour-ish plus questions on May 29th, Wednesday evening. It's a webinar. So the registration link will be linked below. Make sure to sign up for that. And we do have our John L. Scott coloring contest. The spring coloring contest is back. So that is ages 4 to 18. 4 different categories. So if you want to scan one of those QR codes or visit johnlscottfoundation.org/contest, you can find the coloring page and entry details for that. And my spring buyer and seller guides, I do still have some of those available. So reach out and request your copy. I can send those over either via email or have a hard copy, and I'll get one of these amazing guides in your hand. And into the news, Seattle area housing market picks up, but buyers feel the squeeze. So we are definitely in the spring housing market. There are more listings coming to the market right now than we've seen in the past couple months, as we would expect to see this time of year. Median home sale prices for King County are at $980,000, up 12% from last year. So that is a pretty crazy price increase for that period of time. These high interest rates are not keeping the prices dampened, unfortunately. So King County condo prices also soared, with the exception of Southwest King County, where they dropped 6%. Home price activity, here's that for the 4-county region. You can see last year in King County, we're at 875, and now we're at 980. So that is a pretty big increase for a single year jump. So April home sales in King County, Seattle's pretty flat, and Southwest King County did go down just a little bit, but otherwise other areas are up in our region. Prices are up in all categories. For condos in Southwest King County, we dropped about 3%. Southeast King County is up almost 19% for the number of sales, and for prices down 6% in Southwest King County, up 7% in Southeast. New listings of single family homes, those are up 18% in King County from the previous month. So that is a pretty big jump. We are definitely seeing more inventory come to the market, which is a good sign. Yet the supply of homes is a little bit dampened. There's a lot of homeowners that are resistant to move because they have this ultra low mortgage rate locked in. Mortgage rates were 7% throughout April, hopefully coming down soon, but we'll dig into mortgage rates in the next couple slides. The rising tide of millennials and other young people looking for homes across the country. There is a lot more young people coming into home buying age. The size of this group rivals the baby boomers at their peak in the 1980s. And so that is driving demand and home prices upward, making the affordability crisis even worse. And buyers are unlikely to find much relief from mortgage rates in the near term. Fannie Mae is predicting that they'll average 6.6 this year and 6.1 next year. Wells Fargo's 6.5 this year and 5.9 next year, so not too different. And that brings us to our market stat minute. For Southwest King County, overall, about 70% of homes were going pending within the first 30 days, but it really depends on what price point you're looking at. In the $570,000 to $750,000 category, there's 0.7 month supply. So if no new homes came to the market starting today, we'd run out of homes in 0.7 months if they continued selling at the same rate. 85.2% of homes in that price point going pending within the first 30 days. So that is an extreme frenzy. We have an overall severe shortage in all categories. And for Southeast King County, 0.7 month supply overall, 78.1% of homes going pending in the first 30 days. So that is an extreme frenzy. Severe shortage in almost all categories until you get up to about 1.5 million and above. And then we have a strong market, but 4.3 months supply of inventory above 1.5 million. For new resale listings, those are trending up. This is for Southeast King County. So they've trended up every month this year for new homes coming to the market. And for Southeast King County, this month it did tick down, but I wanted to show the Southwest King County because that one did tick up. Overall, in King County, we're ticking up in this category, but I just wanted to show this. It really depends on where you're looking because Southeast King County did tick down in the total number of buyer contracts that they had this month compared to last month. And if you compare both of those numbers together, you can see the bar drop for the buyer contracts, and the green line is for new resale homes. So that gap in Southeast King County is getting wider. Whereas Southwest King County, it is a much tighter gap there. And for our hyper-local breakdown, for new resale listings, we did tick up in 3 of the categories. Federal Way, down 3.6 from a year ago, but up from a year ago in all other categories. Kent did tick down from last month, but all other areas ticked up for new listings. Pending sales, again, Kent went down, but that's probably because we had fewer new listings coming to the market, and up in all of the other areas. For median days on market, we are rock bottom here. 6, 7 days, 5, 6, 7 days on market is our average. So those homes that are coming to the market, there's some that are sitting on the market a little bit longer and some that are going pending in 1 or 2 days. So it just depends on what you are looking at or what area you're looking at. But overall, it is very fast turnover with just 5 to 7 days on market. And median sales price is down in Auburn from a year ago, but up in all of the other 3 areas. And Renton's pretty flat compared to last month, but up in Renton, Auburn, and Federal Way. And last month, for our mortgage rates when we met, were at 6.88 for our weekly average and 7.3 for our 30-year fixed daily number. This month, for our weekly average, we are down to 7.09. So good trend to see. We are definitely lower than we were this time last month. After climbing to a 23-year high in October, the mortgage rate stayed below 7% until last month. Even with the modest decline this week, it's well above where it was just 2 years ago at 5.3. The recent trend upward has been an unwelcome development for prospective buyers in the midst of what is traditionally the busiest time of year for home sales. So a lot of people predict that if interest rates go down at all, we are going to have an incredibly busy fall season. And for our daily interest rate, we are at 7.16. So you can see it's come down pretty significantly from a couple weeks ago. The biggest thing when looking at mortgage rates right now is volatility. That's from Nicole, the senior economist at Zillow. We were up right around the 7.5 mark and have just plummeted down over the last week. And that is a good trend to see. Every month brings a new set of inflation and labor data that can influence the direction of mortgage rates. Ongoing inflation deceleration, a slowing economy, and even geopolitical uncertainty can contribute to lower mortgage rates. On the other hand, data that signals upside risk to inflation may result in higher rates. And that's from the deputy chief economist at First American. And from Forbes, mortgage rates are indirectly influenced by the Federal Reserve's monetary policy. And when the central bank raises the federal funds rate, as it did throughout 2022 and 2023, that has a knock-on effect by causing short-term interest rates to go up. So the Fed did meet last week on the 1st. The committee decided to maintain the target range for federal funds rate at 5.25% to 5.5%. So they are staying steady. And the committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. So there are all sorts of things around the world, really, that affect our mortgage rates here in the States. So it can be national job conditions, labor market, or it can be geopolitical things going on around the world. I know people have expressed concern about the Fed keeping the rate where it is, but just to explain where they're coming from, reducing the policy restraint too soon or too much could result in a reversal of progress we have seen in inflation and ultimately require even tighter policy to get inflation back to 2% from Jerome Powell of the Federal Reserve. In the 1970s, they had a big run up of inflation and then they cut rates too soon and it jumped back up even further than where it was before. So this is what we're trying to avoid this time around, because we saw like the first peak over in the 70s, that happened again here. So they're trying to avoid getting that second peak in inflation. So the Fed is keeping the rates higher for now, just to ensure that we don't have a worse outcome than we need to. For mortgage rate projections, Fannie Mae, MBA, and NAR, the average of all three for the end of Q4. So ended this year, they're looking at 6.43% as the average guess of where we will be. I mean, this could change at any moment. There are so many factors affecting mortgage rates that these projections are constantly changing. They're changing from day to day, month to month, and always adjusting. So don't think that this is exactly what's going to happen, but the prediction is to be around the mid sixes by the end of the year. So if that happened, right now we're up here in the red between the 7 and 7.5%. So we have weak buyer demand. If we drop below 7%, it'll be limited buyer demand, but definitely more people in the market. If it drops below 6.5%, people are going to flood back into the market. Home prices are going to keep going up. There's just going to be a lot of activity flooding back into the housing market if those rates do drop below 6.5%. And affordability is at a historical low. If we look at it with those high interest rates, the inflation, wages maybe not keeping up as much as they should, we have seen an erosion of affordability, and 2023 was lower than we've been since 1990. This chart goes back to 1990. So this isn't that great of news, but the good thing is we do expect this to get a little bit better. And we do see builders responding to those numbers. Builders are building smaller homes. More than a third of home builders say they built smaller homes in 2023, and more than a quarter plan to construct even smaller this year. That's related to two factors that are linked. First, we've seen changes in homebuyer preferences. Second, housing affordability has worsened in recent years. So we know the affordability is not great, and builders are building smaller homes to try and help homes become more affordable for those trying to enter the market. New single family homes are getting smaller. Here's back to 2020. In the pandemic, homes throughout 2021, they kind of got bigger on square footage. 2022 started a small home revolution. So we're heading smaller. Q4 of last year was much smaller than we were building at the beginning of 2022. So home builders are adapting to the lowest affordability on record by building smaller homes and offering more incentives and price cuts. And it's not solving the affordability crisis, but it is creating opportunities for people who are able to afford an entry-level home in an area. And if you get that size down, that automatically will make a more affordable home. And just a reminder, that coloring contest, enter by May 31st. So if you got kids in the house, make sure to get them entered so they could possibly win a $100 Amazon gift card. And that pre-home buyer workshop is at the end of the month on May 29th. Make sure to register for that. Save your spot. Full of great information and a chance to get any questions you may have answered. And my spring buyer and seller guides are available. So if you're thinking about making a move this year, make sure to reach out for one of those. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area you might be interested in moving to. If you have any questions about the national news, mortgage rates, any of that, feel free to reach out. I would love to have a chat. And once again, thank you so much for joining me for your South King County Real Estate Update. I will be back next month with your June update or your May recap. So make sure to tune in for that, and make sure to sign up for the pre-home buyer class if you are thinking about buying a home. It's a really great source of information and a chance to get those questions answered. All right, we'll see you next month. Have a good one.